Welcome to this week's African Agri Overview, where we'll be looking at the grain market in Malawi, which is likely to increase imports due to possible production constraints this season. This can have a positive impact on prices in the region. All in this episode, so make sure to stay tuned. I am Dr. Johnny van der Merwe and welcome to this episode of the African Agri Overview made possible by Zimmatic irrigation systems. Zimmatic pivots and lateral move systems combine high-quality components with exclusive structural designs and innovative features for a long-lasting solution you can count on. Also make sure to contact our regular market analyst Jacques Pinaar for more detailed reports on the African soft commodity markets. But with that said, let's take a look at what happened in the economy over the past week. As usual, we start off by looking at the latest oil price movements, which is usually a good indicator of economic activity worldwide. Since September of last year, oil prices however remained in a downward trend and are now trading around $78 per barrel. Higher production in America and uncertainty about demand from China are still keeping these prices on a lower level at the moment. But geopolitical conflict, especially in the Middle East, is now escalating, which can potentially cause supply constraints and push oil prices even higher. But with that being said, Jacques will now tell us more about the latest developments in the grain markets of Malawi. Over to you, Jacques.
Thanks Johnny, and welcome to all the viewers. We have not discussed the Malawi maize market on any of our podcasts up to this point. However, given the Malawi import need for this season and expectations this need is likely to continue into next season, probably an opportune time to analyze. The Malawi import need and size of it has an impact on the entire region from Kenya in the north to South Africa in the south. Let's look at our Malawi maize production and consumption estimates for the past 7 years, as well as our current year forecast. On average, Malawi produces around 3 million tons of maize annually and consumes in the region of 3.2 million tons. Close to being self-sufficient, but usually a small net importer. Malawi almost always has a formal export ban, but difficult to stop informal exports when opportunity presents. It is an attempt to keep the crop for local consumption, but this, to an extent, discourages production growth as no export opportunities exist. Let's look at the 2023-24 year, the current year running from more or less May 2023 to April 2024. It is the largest deficit year during the last 8 years. There was production issues due to the cyclone that hit central southern Malawi early in 2023. However, healthy informal exports during the 2022-23 year to Tanzania, following lucrative prices, added to the current deficit. Malawi has been importing informally since the middle of 2023 from Zambia, Mozambique, and to a lesser extent Tanzania. We understand some South African maize meal also being imported. The Malawi government banned maize imports from Tanzania late December, citing the potential spread of maize fatal necrosis disease as the reason. However, our contacts indicate informal flows from Tanzania ongoing. Relatively high maize prices the past year should see the maize planting area increase for the new crop to harvest from May-June. But inadequate fertilizer availability could impact yields. Also, the rainy season was delayed by 4 to 6 weeks, which required some replanting, and general late planting could impact yields negatively. Good widespread rain was reported since late December, and the planting campaign is probably close to completion. It is too early to call a potential production number, but even with an average crop of around 3 million tons, Malawi could be a net importer this coming season. At this stage, it seems the effect of El Nino is softening, but it is early days. Weather forecasters still expect the El Nino weather pattern to continue until mid-2024. The typical El Nino trend caused normal to below normal rainfall for Malawi. A dry February or March could still have a material impact on yields. This graph illustrates the Malawi maize price history since 2019 in US dollars per ton. During March 2020, prices crashed due to the market moving from a shortage situation to an early new crop harvest as indicated by the green circle. During May 2021 to May 2022, prices traded at extremely low levels at around $150 per ton, on the back of the record crop that harvested mid-2021 and the overhang it caused in the market as the surplus was not allowed to be exported. See the blue circle. Prices reached record high levels during February-March 2023 at around $400 a ton as stocks ran low due to the informal exports to Tanzania. See the red circle. Prices did move lower during harvest time mid-2023, but a smallish crop that harvested saw prices remain relatively high since, currently trading around the $380 a ton mark. Growing conditions during the next few months should determine price direction in the short term. By March, green maize should become available, which should slow maize meal demand and therefore pressure maize prices. A normal crop should see prices lower during the main harvest period of June to August. After that, prices could find support through the anticipated import need later in the season. A lot also depends on price levels in Zambia and Mozambique, the normal suppliers to Malawi. Next week, we will discuss the Zambia soybean market, an important supplier to the region. Remember, quality information improves decision making. Contact us for more detailed, tailored information.
Thank you, Jock, for sharing such valuable insights. These videos are made possible by Zimmatic irrigation systems. For those seeking more detailed information and comprehensive reports on sub-Saharan African soft commodity markets, I encourage you to reach out to Jock Pinaar. I'm Dr. Johnny van der Merwe, and thank you for watching.